is majorly to promote excellence in pharmaceutical practice. However, from time to time, you realize that that excellence, you may not attain it when a number of things are not at peace with yourself. You are bereaved, you cannot be able then to attain this excellence we are talking about when everything else is not in order within yourself when you lose a loved one. For that reason, the other bit of KPA, which is very key, is normally the objectives of the association. And as an association, we have a major objective amongst the 8 objectives that KPA is supposed to achieve. One of them is actually the to promote the general members' welfare, and that welfare includes educational, professional, economic, so that then as a member, even as you practice out there, then you are able to also cater through all these requirements within your life and within the standards of practice. It is what informs us again and as the welfare subcommittee to also achieve this particular objective. The second one is actually to defend and enforce rights and privileges that actually you as a member, you deserve in practice. The third one is the standards of professional practice that we are required to uphold, ethical standards amongst the members of KPA. So KPA has got around 8 objectives, but these are just but a few of those 8 objectives that we are required to meet. And amongst them is the general welfare of you as a member. So a little background on why we are coming up and the subcommittee on welfare came up with the last respect cover for our members is that from time to time we receive distress calls, we receive a lot of requests from our own members on a lot of need for financial assistance and support whenever they lose their loved ones. Many at times we receive a lot of distress calls from these members who lose their loved ones, and they would need the financial support. They also need a lot of, you'd find that the lost relative has left a lot of expenses that need to be catered for. And therefore, they are in a lot of distress to be able to raise some of these funeral financial expenses. We also have received several requests when our members lose their loved ones, in terms of financially, yes, and also the need of these members to actually have a peace of mind when arranging for their financial funeral expense. And therefore, it is in this background and the number of calls that we receive from time to time that the welfare committee thought it wise that to mitigate on this, can we come up with a group last respect cover that then can assist those of us who are bereaved from time to time in the course of the year and several years to come. So the advantages of actually taking up a last respect policy, and many of us who have never been affected in any way may never realize why it is important to take up a last respect policy. And I'll just take you through a few of the merits that you as a member would be important for you to take up a last respect policy. It is never because you think that one of you is about to disappear from the world, but it is always to be in readiness for any eventuality. And hence, it gives you a financial support as a member who is bereaved, so that your family who is deceased can have funeral expenses covered and other related costs that are related to this funeral are also able to be covered, thereby alleviating the financial burden that your families may be going through, which are very difficult. And at that time, that is also a time of mourning. So you would be going through two stresses: the stress of mourning your loved one, and also the stress of raising finances to be able to cater for this particular event. And it is that reason that then we are coming up with this cover to be able to then alleviate all these costs on you, and you be able to focus on mourning your loved one. Number two is so that you are able to give your loved one a dignified farewell. And you as a member, you can be able to receive a dignified farewell, or any of your loved one who then is able to receive a very dignified farewell. Number three would be that this policy gives then a reflection of our commitment as KPA to the general welfare of you as a member. It also brings us together as a community of KPA Nairobi, then gives us a way of supporting you as a member, and also shows you that KPA cares for you. And that is why we have come up and thought through as the welfare subcommittee to be able then to be with you together and come together in unity as a community, so that at times when you are down, when you are bereaved, then you can be supported. Fourth is a way of encouraging responsible financial planning. And a number of times we believe that this cover will ensure that our members are prepared for unforeseen events. We said earlier that no one is expecting any of your loved ones to disappear from the world. But then we say those are unforeseen events. So responsibly, you will be able to then have a proper financial planning within yourself, manage your personal and family finances, and that comes as an advantage to you. This policy is also customized and therefore provides members with a coverage that suits their needs and preferences. And that flexibility, again, is what you as a member requires in your family and also as personally as a member. The last merit is that by doing this, KPA is actually meeting one of the objectives set in our constitution to then be able to promote the general welfare of our members. And by so doing, we are recommending a last respect policy as one of the ways of actually being able to meet this particular objective. We are recommending this last respect cover to our members in one of the tangible ways to be able to support this particular objective. And by so doing, then we are also committed to a holistic care for all our members. So that was just a simple, small background information on where we have come from and why we are proposing for you to take up a last respect policy cover. And in the next presentation, then you will be able to understand now delve fully on what this cover really is, and you'll be having an opportunity again to now ask as many questions relating to the last respect cover as much as you can. Again, you will also be introduced to a medical cover that, again, the welfare subcommittee is currently working on to also introduce as a second cover, just to show you how much then we as KPA are trying to cover for your general welfare. Thank you. I want to take it back to the MC of the day, Bernard Calvin. Back to you.
Thank you, Mr. Cletus, and I highly appreciate the background information that you've given to the membership for why we are here and what made us make this decision. To the membership, allow me to inform you that last respect policy, it's not a new thing at KPA Nairobi branch. I can say that currently it's 2 years old, and within the period of 2 years that it has been in existence at the branch, more than 15 of our members have gained through that cover, and our insurer has supported them without any drama. And the amount up to $500,000 has been submitted without any drama within 3-day period. Now, at this juncture, for us to get more information, what needs to be done for me to onboard, allow me to welcome Mr. Alfred Mutua, who is a bank assurance regional manager at KCB Bank, who is going to give us more information. So, Mr. Alfred, if you are ready, karibu.
Good evening, members.
Good evening, good evening.
I hope I'm audible.
Yes, you are very audible.
First of all, I would like to thank you all for this opportunity. I'd like to start by introducing myself. My name is Alfred Mutua Mweke. I work for KCB Bank Assurance Intermediary Limited. KCB Bank Assurance is a branch. Just a minute, allow me to share my screen first. I hope the screen is visible.
Yes, it's visible.
So as I was saying before, my name is Alfred Mutua. I work for KCB Bank. However, generally, I work for KCB Bank Assurance Intermediary. I've been in this business for the last, I think, 8 years. It has been a pleasure. And I'm glad to be here. Thank you to the committee for welcoming me for this opportunity. I think this is my second time to have this meeting. When we were onboarding KPA Nairobi, we had a similar meeting. So I'm glad that the run has been so well. We have even called to a second meeting for us to get more members into this cause. And as I start, I would like first start by defining the bank assurance. Bank assurance is a department in the bank that deals with administration and distribution of insurance products. What happens, I know before the bank was usually rigid on just doing financial services. However, later after management sat down, realized that we have a very huge database and the penetration of insurance in the country is below 2%. So it was a thought that we could contribute much more in distributing of these products, and that is when the bank assurance department was born. KCB Bank Assurance has been in existence since 2010. We were first known as KCB Insurance Agency, then we later changed our name to KCB Bank Assurance Intermediary Limited. We deal with several products, and today particularly I'm here for last expense and the medical cover. So straight to my presentation, you'll allow me to start by defining insurance. Insurance is defined as a financial arrangement that transfers or distributes risk or losses to an insurance pool. What this means is that insurance takes off but the burden of losses that is unexpected and transfers it into one pool. How insurance works is that we create a pool that I started by saying it's a financial arrangement. So there are some terms like premium. I think a premium is the amount of money that you pay for you to get an insurance cover. So when everyone pays a premium, it is all collected in one pool all around the country. Then depending on each insurance company, then depending on that pool, the money that are collected in that pool then are used to service any loss or risk that comes to a member that is in that pool. So what this does is that it helps you plan your finances much better, because some of these risks are unplanned. Actually, most of them are usually unplanned. For example, medication and getting ill is unplanned. Nobody knows kesho ataamka akiwa vipi. Death is unplanned. And at times you find that due to the hard economical times, it becomes very hard for you to cope with such losses when they come unexpected. So you'll find yourself having WhatsApp groups za kusaidia kuchangisha kidogo, going to your friends and family to help you contribution because it's a burden that you cannot take alone and it's very heavy. And most of you can bear with me witness that these occurrences, most of them usually come at a very high cost within a very short period of time. For example, something like burial would, if somebody passes on, you would like to have them buried as soon as possible, maybe a week's time. And maybe that guy, probably they live in the US or they're in Nairobi and they're born in Busia. Their transportation costs, their cost of meals and all other things that are required for such purposes. And you'll be required to raise, for example, I think 300 to 500,000. And for someone to contribute such amount of money within a very short period of time, it might become a challenge. That's why you find, I think I was talking to one of my friends and he told me, wakati wa COVID aliteseka sana because he was in groups after groups after groups. This one has passed, let's contribute. So he told me what happened. He was contributing 1,000 when he started the groups, but however, 4 months down the line, he started contributing around 200 shillings. It's because you get fatigued of the contribution. You also have your own financial things to do. You have children to take to school, you have bills to pay. So for you to cater for all these things, then contributing into these groups will become a very big challenge to you. So in that thought, then that is where now insurance comes in to cater for that, because you end up paying a very small amount of premium, but you're covered for a very huge amount of money. And then you're very sure that you are with a very strong partner, because I think KCB is known to most of us here. We have around 250 branches countrywide. We have been in existence for a lot of years, and we are a trusted brand. So you can be sure that you have put your money where it is very, very safe, and you don't have to deal with those agents who are cons. And when you have a problem, then they switch off their phones and trying to call them and you can't get them. So that is when now bank assurance comes in. And I will not go much into the introduction, but I'd like to tujigambe kidogo sisi pia kama KCB, to tell you the benefits that we give as a bank. Why we are different, because in the distribution channels of insurance, you'll find that you have several channels of distribution of insurance. You have agents, which were mostly known to most of us. I think those of us here who are miaka imesonga kidogo, the kitambo used to take, maybe you have a car, you used to go to an agent who is a particular person, then they organize for you an insurance. Then that is when now the conmen came in. You get somebody, you give them their money, your money, then you get an accident, for example. Your car is not repaired because that guy has just gone into the blues. So the difference now between us and any other agent out there is we are a big company. We have a very big portfolio. So our insurance products are innovative, customized, and unique. We don't believe in offering our clients standardized products, but rather we tailor all our products to meet unique insurance needs for our clients. What this means is that we have a very big book in terms of a customer base and data. So if, for example, Cletus here was an insurance company and he was dealing with an agent who maybe is a single person, that person will be bringing him maybe 5 clients in a day. But then if Cletus as an insurance company decides to deal with KCB as an insurance, then he's very sure that in a day he'll get not less than 600 customers. That means then you bring more addition and value to the insurance company, and that means more money to them. So what now this brings back to the bank is that now we are able to dictate the kind of products we want, the kind of services we want to offer our customers. And you can bear me witness that the products that we have as KCB, you cannot find them in any other market in the country currently. They are very unique, they are very personalized, they speak to the needs of each customer, and they have very good rates that are pocket friendly, because pia hali ya uchumi haijakuwa mzuri for the last, I think, 4, 5, 6 years. So what we're trying to do is we are becoming a solution provider to your financial needs, giving you loans and all that, and assisting you maybe to build houses and mortgages and get car loans. So then we decide if we are giving our customers these products, what happens if now they become sick and they can't pay the loan, and they use the money for the loan then to go and do maybe medication? What happens if their loved one passes on and they're supposed to pay a loan this month and they can't pay because they want to go and bury their loved one? So then we decide now to come up with these other products that are very personalized to our customers, that can provide solutions in case of anything. You know that my bank has covered me. We call ourselves a one-stop shop, because you can come to us in anything financial and we'll get your issues sorted out. So that's what I presented in a nutshell, that our services are also personalized to the customers. And when I say customers, we believe ourselves to be a regional bank that does not serve only the customers in our books. So we serve, even if you don't have an account with us, you still our customer, because eventually utafungua account na sisi. We hope so. So we already consider as our customer as early as even before you on board with us. So even as we make these products, we also make them not only for those that are in our books, but also for someone who tomorrow wants to become our customer. What will they find different in KCB than they will find in a different bank? So we also offer trainings. I think this is one of them to our member groups, because KPA has not been, it's not a new customer, there's not a new thing we're doing. We have been with KPA for, I think, the last 4 years now, if I can confirm that. For KPA Nairobi, I think it's 2 years, but however, we started with KPA Mombasa Coast Region, I think 4 years ago. Right now, they're going to be renewing for their 5th time next year. Then we onboarded KPA Nairobi, and then we onboarded KPA Kisumu, KPA Eastern, and KPA Nyanza. So you can be sure that this is not a new thing we are doing. So we keep offering trainings and such sensitization when we are called upon. We are available, and to ensure that our clients have the information that they require, and that they get the products that are good for them. So just to finish up on our claims, because in insurance, what matters most is usually the claims. A client will pay the premiums very willingly, but then when they lose a loved one, and you're supposed now to pay them some amount of money for them to go bury their loved one, and you start giving them stories and here and there hearsays that are not well, then you end up missing that client next year, and you end up ruining your reputation. So our claim settlement is very efficient, very quick. We have a department for that. We have a very dedicated team in Kencom that has over 15 members to handle each and every region. So we're very sure that in case you have any claim on last expense, as we had given before, it usually takes 72 hours. That is 3 days after you submitted your details. And this is done efficiently and followed up on every corner. So if I'm given a claim from KPA Nairobi, then I'll issue to our claims department, and then I'll keep following up and informing the client, who is KPA Nairobi or any other branch, of the progress, so that they know how we are proceeding, and so that we can also align their plans. For example, if they want to bury their loved one, they can know probably the bank has told me that by Friday I'll have my money. So then they can plan their burial maybe on Saturday. So that way we become a relationship management unit at the same time, an insurance service provider. I think whatever is in this slide right now is whatever I've talked about in a nutshell. So allow me, without further much ado, to go to the main product of the day, that is the last expense product. And I would like us to be keen in this product. And if you have any question, kindly note it down. If you want to ask later, there'll be a Q&A forum. I'm here to answer all questions, no matter how complicated you think a question is, because this topic usually, when I do presentations, this topic has very complicated questions, and it's good to get to know everything perfectly well as you get into the cover, so that when you have a claim, then you can easily know how you're going to be serviced. So what the products we offer is a KBIL. KBIL is KCB Bank Assurance Intermediary Limited. So we offer general insurance products, which is a motor and non-motor. This motor ni zile za magari, non-motor ni maybe you have a house that you want to cover against fire, floods. We also cover that. Maybe you have a shop that you still want to cover. We cover against theft and natural calamities. We offer life assurance products. Now in life assurance, now is where the last expense comes in. Then we have another product that is called an Elimisha. The Elimisha product is more of an education policy that you can take for your child for a period of time and save for their future. I believe we'll have some other session to talk about that. And then on life products, we also have another product, we're calling it a wealth builder. This is a product whereby you can invest at least 50,000 in a year, at a maximum of 250,000 for a period of 5 years, and you get back your returns in 150% after a period of 10 years, depending on the amount of money that you would have saved. So for the last two investment products, I talked to the committee, and we'll have another session maybe later for us to talk about that, because today we are only going to talk about the last expense and the medical products. For those that have agriculture, we also insure crops and livestock against pest diseases and droughts, so that you don't go in losses when your investment comes in. I have talked about fire, theft, and burglary. Then we have personal and corporate pension plans. We also do that. So if you look at, in a nutshell, whatever is in this slide, then you find that all of them are financial solutions. They are solutions to ensure that in any investment that you make, you don't enter into a loss, because if a risk happens or a calamity happens, then you don't have to go back into your pocket to get yourself to get some more capital. And we all know gathering capital, especially in this country at this time, is not an easy thing. So then it is then very important. It's a very essential thing, and I will advise all of us, because I know most of us here are investors. Some of us have pharmacies, some of us have rentals. You try and take a cover for any investment that you have, so that in terms of any calamity, you don't incur a loss. So to our last expense cover, it is called a last expense cover because it covers this is the last amount of money that someone is going to use in their lifetime in this world. Also, that a human being has three phases. There's when they're born, when they live, do adulthood, and when they die. So expenses are usually in those three phases. So this last expense, what it does is it comes in then to cover you or cushion you as a member in case of you're bereaved with any of your loved ones. You don't have to go back to your pocket and source for funds for you to do a burial or send your loved one in a very peaceful way. Our limits are very huge. We have an extension of limits because we understand that the last expense is usually an expensive thing, because there's some of us, for example, those in coast, I know the expense may not be high for those that are Muslims. It might take a day and you're done, but then it also gets some expense because people will also want to eat later. For those of us that come from the Western Ambiance, I happen to go to school in those sides, and I was there for like, I think 6 years. And I witnessed that the burials are really an event, in quote unquote, and they really spend a lot of money when it comes to burial, because if someone wants to fly the body to Kisumu, for example, or to Western, get enough food for the members, mourning happens for a whole week. So the amount of money that you guys, that people will spend in such an event is going to be a lot. So if you're not cushioned in such a manner that you have an extra cover somewhere, then after the burial, it becomes more pain to you. Then it gets you to a point where you can even start having stress, because you have the pain of losing a loved one, number one, and then number two, you have the pain of not having money, because then you have to cover up. And we know after the burial, then people are with you during the burial, but after the burial, a month or two later, then you're still alone and you still have to cover up for your own finances. So what our last expense cover is, it allows you to cover up to 10 members in your family. 10 members, what I mean by 10 members is you, your spouse, a total of 4 biological children, and a total of 4 biological parents. What do you mean by biological parents? It'd be 2 parents for the principal member, the father and the mother, and then 2 parents for the spouse, that is the father-in-law and the mother-in-law. So those are the 4 parents, and then a total of 4 children that are biological and 1 spouse. So one might be asking me, what about like if I have 2 spouses? If you have 2 spouses, then umebarikiwa sana. And because you can take your 2 families, we'll also encourage you to take also 2 covers for the other family. Hizo zote ni baraka pia. So the 10 members, there's a place we've written biological children, but we understand we are in an African setting, and you will find someone has children that are not of their own. For example, your sister might have passed on, you're taking care of their children, or you might have adopted children somewhere, or your sister or brother or friend is not in a very good financial position and you decided to take care of their child. You're also allowed to cover those children, but in this situation, we will have you to have to sign an affidavit with a lawyer that you are the guardian of that child, so that in case of any legal battle that happens later, in case you come and claim, then we have something to cover ourselves, that this principal member brought us an affidavit. It was shown in a lawyer's room, or rather in a court, that he is a legal guardian up to this point. So we will also allow that for those of us that maybe might have more extended families. So you provide proof of legal adoption. This cover commences once the premium is paid in full. However, now that this is a group, collection of premium usually is done through the office. So by the time the group submits the cover to us to book and the list of members, then they already have collected all the premiums for each member, and so the cover then will commence immediately. Like as we're speaking right now, I think we renewed the KPA Nairobi cover sometime the end of last month, and it is up and running. And in case of anything, then the members are going to be paid for. We have a waiting period of 2 months. This only applies to the new members. If you're a new member that is joining right now, which I will really advocate for you to join, because it is another advantage. We have heard from our previous speaker, and I really thank him for the insight that he has given us, because I think he has done a bigger part of my work. And just to show that it is important to have this cover for your own financial planning, and also for your own mental health, so that if, for example, I have a cover of 300,000 and I'm bereaved by a member, and I contribute maybe 150 or 200, I have 100,000 to take care of the other expenses, maybe medical expenses that they might have left. So it also eases your burden when it comes to your mental health. So the 2 months waiting period will only apply for the new members that are joining. However, that because this is a new cover, because this is an existing cover, we might provide a waiver depending on the number of members that are going to join, so that they do not have a waiting period, but continue with the existing members. What you should understand is that this is a corporate cover. We take them as corporate covers because you guys are a big group. So the date of the cover is usually the same. So if, for example, the KPA cover starts on 21st of July and ends in 20th of July the next year, if a member joins in the middle of the year, then they pay the full premium and the cover will still lapse when the cover for the whole group is lapsing. So I need that to be very important, to be understood very well, so that someone does not argue that I joined in the middle, I need to pay half premium. No, it's usually a full premium, regardless of when you join the cover. So if you have not joined, I will urge right now that because you've already started the cover, it's already, I think, like a week old, you can still join with the respective branch and we will still onboard you. Our maximum entry age is 80 years for parents. Next birthday. What next birthday means in insurance is that we look at the age next birthday. So age next birthday means if you have written here 80 years, that means your maximum entry age for the parents should be 79 years. So if they're 79 and some months is okay, 79 and maybe 10 months is okay. But once you hit 80 years, then you're not able to be onboarded, because 80 years and 80 plus a day, that's already past 80 years. So it will be 79 years, that will be, I want us to go 79, but if you're 79 and months is still allowed. However, this does not mean that after you get to 80 years and you are not gotten to 80 years, we disqualify you from the cover. No, this is only an entry age. So after you've entered the cover, even if God blesses you to go up to 100 years, then it is well and good. You'll still be covered and we will still provide the amount of money required in case of you are bereaved. For principals and spouses, the entry age is 70 years. That then would mean, from my previous explanation, that you have to be 69 years and some months, but not hit 70 already. So for the children, we cover from 0 to 18 years. That is the legal age. However, due to our education system, we have given a waiver up to 24 years, because we understand most of the time our children will go to school up to 24 years. That is when they're going to finish their campus or their college studies. So we will allow you, if your child is above 18, then we can still have them on board. However, you still need to provide us with a proof of schooling, maybe a school ID, a fee structure, a result slip, just a calling letter, just anything to show that the child is still in school. If your child gets to 18 and they are not in school, then they become an adult and they are allowed to take their own cover as an adult, sorry. But if they're in school, then we're going to take care of them. For a cover of 500,000, our limits start from 50,000 to 100,000. I'll be presenting that in a short while. However, for a cover of 500,000 and 300,000, the benefit will be capped at a maximum of 250,000, which is half the amount for the first year of cover for individuals with any of conditions. There are conditions I'm going to present next. So I want us to maybe skip this point. I'll come back to it later. The next point will be for a cover of 500,000, we first pay 250,000 to the client, and this will be processed within 48 hours upon submission of the relevant documents in the event a claim happens. The balance is then provided after you provide an original death certificate. However, this only applies to the first year of cover. So for those of us who are already in the cover, if any of you has a cover of 500,000, then in case of any claim, we're going to pay in full. However, for those members that are going to join now, in case you take a 500,000 cover, then you're going to pay half first. This is 250. And then after you submit to us the original death certificate, then we pay you the other half. But then that applies only for the first year. I'll also give the reason for this in the next slide, so you can also hold on to that. We allow multiple covers up to a limit of 1 million, and 500,000 for pre-existing conditions during the first year. This is a typo. This should be 500,000. So what this means is, for example, in a group like this, we might find that we have siblings, and all of them have taken the cover and they have covered a common parent. So maybe person A and person B have covered the same mother, and then they lose that parent. So what we say in insurance is that life is not quantifiable. So we cannot say that the life of this person was worth 500,000, so we're going to pay you only 500,000. No, but we are going, each member is going to be allowed to claim separately as a member, and they'll be paid their money separately. However, because this, I've called it multiple covers. So this becomes a multiple cover because then that life is covered multiple times. So we allow multiple covers up to a limit of 1 million. What this means is that if, for example, two members in this group are sharing a parent and they have each a cover of 200,000, that when we're doing payouts, we'll do 200 to this one and 200 to this one. That is a total of 400,000. So that will be paid in full. However, if we come to a situation where we have maybe 4 members in a group and they're sharing a parent or a common, mostly it's usually a parent, and each member has taken a cover of 300, for example, if you take 300 times the 4 members, that becomes 1.2 million. So what we are saying is that we were only going to pay for multiple covers up to a limit of 1 million. So what we will do is we're going to, instead of 1.2, we're going to take 1 million, and then we're going to divide it among the 4 members according to the ratios of the covers that they have taken. So if someone had taken a cover of 300,000, if all of them had taken a cover of 300,000, we will pay all of them equally. However, if someone had taken a cover of 300, another one 200, we're going to pay each one a percentage of that 1 million according to the cover they've taken. This also applies in those of us that are in different groups because we're a very big channel of distribution when it comes to insurance. And also you guys are big in the pharmaceutical side, and you might have more and more associations apart from the KP association, or you might be having another welfare group from your home, other one from your family, and they might have been sold the same cover for KCB. So when it happens that you lose a loved one, you are allowed to claim under KPA. You're also allowed to claim under that other welfare group. You're also allowed to claim that you can claim as many groups as you had taken the cover for because you already paid the premium. However, if your claim gets to up to more than 1 million, then we only pay up to 1 million. So if you have 4 groups that you have taken each 300,000, the total payout will be 1.2 million. So what we are saying is that we are going to pay you only up to 1 million. I hope I'm clear up to that point. For the first year, the next statement that says this should be 500,000 for pre-existing death during the first year. What this means is that if your member then passes on and you had taken multiple covers, and the condition that has caused them to pass on is a condition that was pre-existing. For example, you had taken multiple covers in different groups, and then your bereaved passes on because of cancer that they had 3 years before you joined this cover, then you're going to pay all the claims, all the 4 claims, but you're going to pay it up to a maximum of 500,000. The next point will be the maximum amount payable for death of a child is 10 years. This is according to Section 487 of the Insurance Act that caps children under 10 years to be paid not more than 100,000. What this means that I've said that you cover up to 4 children. So if any of your child passes on and they are less than 10 years, then we are only going to pay up to 100,000. So if you've taken a cover of 50,000, we'll pay you 50,000. If you've taken a cover of 100,000, we'll pay you 100,000 for that child. But if you've taken a cover of 200,000 and the child that you have lost is below 10 years, we're only going to reimburse you up to 100,000, the maximum. But if the child is above 10 years, then the child is going to be paid in full, depending on the amount of cover that you have taken. This cover offers 6 claims in a year per person. I want us to get that part of a person. What this means that we're not going to pay 6 claims for KPA in a year, no. You're as long as you come into this cover as a group, you also are taken as a single life. So what this means is that we're going to pay a maximum of 6 lives per family. So if you have covered 10 people or 11 people, then we are going to pay you up to a maximum of 6 times. We hope that this does not happen. This rarely occurs unless it's an accident and the family was traveling together, but it rarely happens. But if it happens and someone loses family members more than 6 times, then you're going to pay up to the 6th time. After you pay the 6th time, then your cover becomes suspended until the next year of renewal. Not for the whole group, but for the individual. one other thing to note is the cover has no expiry age. Then I'd like to go back to point number 1, whereby the cover covers the principal members, one spouse, 4 biological children, and biological children, if you provide a document. This is a total of 10 members. However, we are in African setting and most of us might be blessed with more than 4 children. We have not locked them out. We are also allowed to cover the extra children, but under a small fee. So these are our cover benefits. We are offering this product together with Old Mutual. So Old Mutual is our insurance service provider that provides this cover to us. So what they do is that they pay us the claim. Then the money does not come from KCB, it comes from Old Mutual. What we do majorly is usually the administration. However, our pool is very big, and the account that pays these covers is domiciled in the bank. And sorry. Sorry about that. The account is domiciled in the bank, and therefore I can assure you that you're not going to find any time that you're going to have a claim and it's going to be delayed, or it's going to have stories of here and there, this happened, that happened. No, I can assure you that, and this is also a testimony for those that have claimed with us before, that they have been paid. I've been fortunate enough to deal with this group or KPA since inception. I've been the one handling all the branches, and I can confirm from KPA Nairobi to any other branch that I've covered that they have gotten their reimbursement in due time and without any inconveniences. So as I said before, this cover covers a main member, 1 spouse, 4 children, 2 parents, and 2 parents-in-law. That is a maximum of 10 children. Sorry, that is a maximum of 10 members in a family. However, if you have an extra child, a premium for additional children, depending on the option that you take, you are then allowed to add some amount of money. So for example, for option 1, you pay 120 shillings for every extra child. For option 2, 240. For option 3, 420. That way up to 720. So as you look at the amount of money that are being paid, they are very less compared to the amount of money that you would contribute if you were maybe in a welfare group. And maybe, for example, if you go into a welfare group of 100 people and they don't have this cover, that will mean if a person passes on, the minimum contribution will be maybe 500 or 1,000. Let's even take 500. And then we lose around 10 members in let's say around 10 members, and you're contributing 1,000. That will be a total of 10,000 you have contributed as a person. So take that, multiply it to the number of members in that group, then they'll have contributed up to a maximum of maybe $1 million plus, or around 300, 500,000. And the amount of money that the family gets is usually very low. And then it comes to a group like this. I know you have your own other plans apart from last expense. You would have used that amount of money maybe to do some other project that will benefit the group members more. Maybe you would have taken a medical cover with it. You would have maybe built a plot somewhere, maybe bought land somewhere. So what we do is we give you very pocket-friendly premium, so that the amount of money that you get, you can also use it in other projects and build yourself financially. So we have options. The options are open and flexible to each member depending on how their pocket is and how they want. However, this we like to leave to the office to decide with the members. If the office decides that you take a similar option, all of you as a group, well and good. If you decide to make it flexible, well and good. However, what I've seen in the previous and the existing covers is that members have been allowed to take any option that they want according to their personal needs. So the option starts from 50,000 all the way to 500,000. So for an option of 50,000, we have 2 bands of payments. We have a premium per nuclear family and premium per extended family. A nuclear family will constitute of the principal, the spouse, and their children. An extended family will consist of a principal, their spouse, their children, the parents, and the parents-in-law. So in any case that maybe a member might be they don't have a spouse, but they have 1 parent, then that becomes automatically an extended family. In any case that we include a parent or a parent-in-law, it changes to an extended family. So for example, if you take cover of option 2, which is 100,000, For someone who is covering themselves, themselves, their spouse, and their children only, they'll pay 1,830. This is payable in a full year. Like the 1,830 covers you for 1 year. For member who is covering themselves, their spouse, their children, and their parents or parents-in-law, even if it is only one parent or one parent-in-law, they'll pay 4,290. However, in any case that they lose a person, then they'll be paid, they'll be reimbursed 100,000 within 72 hours. And remember, I had said that we pay up to 6 claims in a year. So we don't pray that this thing happened to someone, but in case of an eventuality and it happens, then you'll find out that this cover is meant to cover you for, it has cushioned you for a total sum assured of, for example, option 2 has cushioned you for a total sum of 600,000 for only a premium of 1,290. 600 means for each member has 100,000. You can see here, a member has 100,000, the spouse has 100,000, the children have 100,000, and there are 4 of them. The parents have each 100,000. The parents-in-law also have 100,000. So this has cushioned you up to a maximum of 600,000 for only a premium of 4,290. If you will do your math and convert this or do the same comparison with a different group that is not an insurance company, then you find that getting to get that some amount of money in a funeral setting is going to be way more strenuous to you. And it's easier for you to pay 4,290 in a year and forget about it and wait if God forbid, but if you lose a member, you know, at least I am cushioned somewhere. I have my 100,000 somewhere or 200,000 somewhere. You can comfortably walk into that family meeting and say, I'll give out 50,000 or I'll give out 100,000 or I'll give out 200,000 without asking yourself questions. Nitafunga duka kwanza ama nitakopa nani, nitaenda Tala, nitaenda branch, nitaitisha marafiki. You close out those options and you leave yourself. It gives you a space where you're very comfortable as much as you're grieving, but you're very sure that somebody or some company somewhere has my back. For option 3, you'll see it covers 200,000. However, under children, you're seeing we have put 100,000. This is what I meant by capping the children to 10 years. So children that are below 10 years are usually paid up to 100,000. However, a child that is above 10 years, the amount payable for that child is usually half the sum insured. So this is because children funerals are usually not that expensive or not that costly compared to elderly ones. So you'll find if you take a cover of 300,000, then in case you lose a child, we reimburse 150. If you take cover of 400,000, in case you lose a child, we reimburse 200,000. If you take a cover of 500,000, that is a typing error, sorry, you get a cover of 250,000. The same applies to the 400 cover, the 500 cover, or all through. But however, for the adults, then they are paid up in full. So what I was saying before was there are some conditions like cancer, which are chronic. Mostly the chronic conditions, cancer, major organ transplant, and HIV-related illnesses. Yeah, majorly those ones. So there's a point I was talking about in the previous slide. So if you, let me just take you to that point. The point I was talking about here, point number 5. So if your member has any of those illnesses, cancer, major organ transplant, HIV-related illnesses, and they pass on because of any of those illnesses, then we're going to pay only half of the amount that you have taken. That is only if you've taken a cover of 500,000. We're going to pay 250,000. That is if they have passed with those conditions within the first year only of your admission to the cover. However, if they have passed with any of those conditions after the second year, then we pay in full. The same applies to point number 6. So the same point number 5, where we say that we'll pay 250 first and then another 250 after you bring us the death certificate. The reason for this is because usually when a claim occurs, because we need to pay you or we need to reimburse you the money within 72 hours, you cannot get a death certificate within 72 hours. But however, a burial permit is given immediately after you admit your loved one to a morgue, or maybe if they've passed at home and the police have come taken the details, you have taken them to a morgue, then the chief will give you a burial permit. It is usually the first document that is given to you as a proof that you have lost someone. So that is what we use to reimburse you the money. We just need your ID, the ID of the bereaved, and the burial permit. And then we'll give you a form to fill and have the form, either if the person has passed on in an hospital, we'll have the hospital stamp that form for us. If the person has passed on in at home, you'll have the sub-chief or the chief stamp for you that form, as well as stamp the burial permit. So whoever stamps the burial permit also has to stamp the form. And in this case, then you'll find, because we are paying with the burial permit, the burial permit usually does not have the cause of death indicated. So that is why we said for the first year, for a person who has taken a cover of 500,000, then we're only going to pay 250,000 first. Then when they bring the death certificate now, if it is indicated malaria, for example, we pay the other 250,000. However, if it is indicated cancer as cause of death, and it is the first year of you taking this cover, then we don't pay the extra 250,000. I hope that comes out clear. However, I want us to understand that this only happens during the first year and only for a cover of 500,000. So what we require to onboard you in this cover, we require your as a principal member, we require a copy of your ID, a copy of your KRA PIN, that is a spouse member. No, the principal member. The spouse will require a copy of your spouse's ID, and also copies of the parents and parents-in-law's ID, and a copy of birth certificate or birth notifications for your children. You don't have to submit these documents in the original format. If maybe your parents or parents-in-law are far away and you're living in town, you can request them maybe to whoever is at home that is tech savvy to take a photo of the same, or scan their IDs and send them to you. Then you can print them on this side, because we don't do the verification on onboarding of the IDs. However, we might do the verification of the IDs after we have paid a claim later. So up to that point, that is the presentation on the last expense. I hope it is clear. If anyone has a question, kindly you can ask it after the presentation. When it comes to a claim, as I mentioned, the claim is paid within 72 hours. We don't pay in check and we don't pay in cash. We do an FT, that is a funds transfer directly to your account. So in case of a claim, we need your account details, the details of the person who has passed on, the burial permit, and your ID. And then you fill our form. When you submit to us within 72 hours, we'll have processed the money. So usually we say 72 hours because you might bring your claim when there's a bulk of claims. So we might have then that sorted within a maximum of 72 hours. But you can bring your claim when there are no other claims. We will sort that within a day. So it also depends with the time, but the maximum time frame on average we do is 72 hours. That is 3 days. It also depends with the bank that you're using. If you're using a different bank because it's an FT, a SWIFT will usually take at least 24 hours. So if we transfer the money today before, how SWIFT transfers work in the bank, if a transfer is done before 12 p.m., then you might receive the money the same day or the next day in the morning. But if a transfer is done after 12 p.m., then you will receive the money the next day, probably evening or the other day in the morning. That is how it works. So after we process your claim, then you send you a receipt, that the bank receipt, we call it a vendor notice, or rather a remittance notice, to show you that we have already remitted the money. So you just wait for maybe a day or two and you'll have the money in your account. Then you can do your plans. And then we also send the same documents to the KPA official or the KPA office for their filing and recording, because this cover is also not an individual cover, it is a corporate cover. So I hope I'm clear up to there. I said we're doing it with Old Mutual, but however, you don't have anything to do with Old Mutual. So if you have any claim, you have any question, you have any query, you don't have to go to Old Mutual, because they are just providers, service providers for that. We are the administrators, so in case of anything, you come to us. I said we have more than 250 branches in the country. So in case, no matter where you are in the country and you find you've lost a loved one and you have this cover, you can send your documents to KPA, the office, they claim through us. And if you have a query, you can walk into any branch and ask, and you'll be given an answer, because we also have representatives around in every branch for this service. I hope up to there I'm clear. If you allow me, I'll go briefly to the next cover, which is a discussion that the officers told me that you guys are having. So remember I said that we offer a range of covers. Actually, we offer all covers. And we are not only a bank in the country, we're a regional bank, we are an international bank. We have branches all over Eastern Africa. I don't know about the management, but we are hoping soon it might be go to other countries. We have our agents in countries like Qatar, Saudi Arabia, America, Europe. You can have someone in Europe and still opening an account. We have our agents there who will open the accounts and send everything to us. So you should be sure that if in case of anything that concerns this bank and you're anywhere in the country, then you'll be taken care of. So then for our medical covers, which is our next topic, we have several medical covers. We have covers that we call Simba Afya, Simba Health, Simba Senior, and Simba Junior. You'll realize that our logo as a bank is usually a lion. So that is why the name is coined under the Simba, because of our icon, which is usually the lion. So I'll go briefly to it. Simba Afya is a more affordable cover. That is how I like to define it. It is a medical cover that it is very good. It does not have any inconveniences. It is a very good cover. All our covers are customized and we have done a lot of research from the company that is providing the medical covers to the hospitals, to the specialists, and even to the premiums and to the customers. So it is a very well researched for cover. However, it has been customized to fit the pocket of a person who maybe they're not that well financially enabled. So it has an outpatient cover. Now that I'm talking to medics, I know you understand this was Nastapata kazi ngumu. We have an outpatient cover which starts from 50,000 to 75,000. However, we have increased this from 50,000 to 1 million. That is an outpatient cover. Then we have an inpatient cover that starts from 150,000 all the way to 1 million. I hope I'm clear up to that. So Simba Afya, what Simba Afya does is it allows you to access hospitals. However, it does not allow you to access Tier 1 hospitals because, for example, you'll find a service in Hospital X, which is maybe Tier 2 or Tier 3, is going to cost maybe around 20,000. However, the same service in a Tier 1 hospital, maybe for example, also like Nairobi Hospital, Aga Hospital, the same service might be costing 60 or 70,000. So what Simba Afya does is that it limits you to go to those hospitals that are either Tier 2 or Tier 3. So you'll have hospitals, you find hospitals like I think one I've seen common in Nairobi, Penda is usually in this cover, Avenue. Also that what does, because as you can see the limits, you have 50,000 for outpatient up to 75,000. So that is a very small limit. If you go to a Tier 1 hospital, within 2 or 3 treatments, that limit will be depleted. That's why it limits you to such kind of hospitals. Inpatient from 150,000 all the way to 1 million. Our covers do not discriminate any illness. It covers up to COVID-19. It allows outside treatment. If you're recommended to travel to India, any other country apart from the USA, we have medical providers in all those countries. So in whichever country that you're going to be subjected to go to for treatment, then you just give us a notification and the letter from the doctor, then we approve for you the limit. And the goodness with our cover is that it pays even for you your air tickets and an extra person who is a spouse or whoever the dependent is going to take care of you outside the country. Majorly it is India because yes, sorry. Usually it is India because most doctors will want to refer to India because the cost of medical services in India are much, much cheaper. Then we have a Simba Health cover. This is a bigger cover. Now this cover is very comprehensive. It covers all hospitals in the country. You can go to any hospital. You can, it does not limit Tier 1, Tier 2, Tier 3, depends with whichever hospital is near you. It has a bigger limit from 50,000 outpatient to 300,000 and inpatient from 1 million to 10 million. All these limits are flexible in the way you match them. You can take a cover of maybe 60,000 outpatient and 10 million inpatient, or you can take 10 million inpatient and 200,000 inpatient. It depends on your needs as a person. Also, it's important to know that we don't allow outpatient covers only. You're only allowed to take, and you can either take an inpatient cover alone or take an inpatient and outpatient cover together. We have a Simba Junior cover. What this means is that we have this specifically made for children. So if you want to take a cover, you employed somewhere, or you already have a cover, and maybe you feel that that cover is not enough for your child, you can also come to us and we're going to give a Simba Junior cover, which now covers your child. And specifically, this is specifically tailor-made for children. It has all children products, the vaccines, KPs, and everything. And it also have pediatricians and specialists who are well-trained in any hospital. So the Simba Senior and Simba Junior covers also do not limit you in a hospital. You can go to a Tier 1, Tier 2, Tier 3 hospital. The Simba Senior cover has an outpatient of 100,000 to 300,000 and an inpatient of 500,000 to 5 million. The Simba Senior cover, and this is a very peculiar cover because it's very hard to find it anywhere else in the market. We discover that most covers, usually the maximum entry age for a medical cover is 75 years. And once you get to 75 years for a medical cover, then you're opted out of that cover. That applies also for our Simba Afya and Simba Health cover. The maximum age for a person to be in those covers is usually 75 years. So once you hit 75 years, then you're no longer eligible to have those covers. That is the reason we designed as a product called a Simba Senior, which now then takes care of our elderly citizens who maybe it starts from the age of 65 and runs all the way to age of 85. So if you have a parent who is at that age and they maybe have a condition and it is really giving you a hard time in paying for them, you're also allowed to come and seek this cover. And then you pay some premium, you do a medical test and then you pay some premium and then we cover you up. We have international medical covers. Now this one we've partnered with Allianz, Bupa, Axena, Etela. These are international medical insurance providers. So these ones will give you a medical cover for all the countries in the world, with an exception of the United States of America, because USA medication and medical services in the USA are usually very expensive. So if you really want to have it in the USA, then you'll have to look for a medical provider who is in the USA, and then we will now onboard you using that. We have Uzimatele Health. This is a medical cover that we use it for corporates like you. However, Simba Health and Simba Afya also can be done as a corporate cover. So because in this case now we are dealing with a corporate, then we will, and you're not a new customer, we will customize to you a medical cover depending on the limits. So what you'd like us to take note is that our medical covers do not discriminate any hospital. They do not discriminate any illness. If you come as a corporate cover, they do not have, the benefit with coming as a corporate cover and coming alone is that alone you'll have waiting periods of maybe 6 months for pre-existing conditions, and maybe maternity 12 months. However, a corporate cover, unachukua cover leo, if it's a corporate cover and tomorrow it starts functioning, does not have any waiting period. So that is one benefit of coming as a corporate. However, we have an option where we customize your cover according to your needs. So you'll take note that we have outpatients starting from as low as 30,000 all the way to 300,000, and inpatients starting from 500,000 all the way to 10 million. So depending on how you like to have it as a corporate or as a group, then you will discuss, and you give us a list of your members and how you like them to be covered and with their families, and then we design for you a very good cover and give you even a very good discount for being our customer for a very long period of time. So that is, in a nutshell, that is generally about our medical covers. It's something to think about, and I hope the committee will give time to it, and they'll come back to me when they have finalized on it, and then we can onboard you and give you at least 3 to 5 prepositions for you to choose which one resonates best with you. The good thing here is that you guys are medics, so if I give you a document that describes all those terms, it becomes easier for you to understand and choose one that is really going to fit you. Up to that point, I think I've come to the end of my presentation. Whatever is here are the benefits of taking insurance with KCB. I had already discussed them before. So in a nutshell, I will leave you with a quote from Winston Churchill. It says, if I had my way, I will write the word ensure upon every door of every cottage and upon the blotting book of every public man, because I am convinced for the sacrifices so small, families and estates can be protected against catastrophes which would otherwise smash them up and forever. Thank you. I'd like to take it back to our MC for the day to take over the program. Thank you so much.
Thank you, Mr. Alfred Mutua. And just confirm if you are related to the famous Alfred Mutua, former governor of Machakos County, because your names resemble.
It is just a coincidence.
Thank you. And you've rightfully put it with a lot of eloquence, and you are very clear. At this juncture, allow me to still remind our members to bring all the questions that you have. Kindly put them at the Q&A section, and so that we handle it as Alfred takes a glass of water. And Alfred, don't go far. I'll bring you back just in a minute. I'm seeing most of the members are asking about most of our members asking about the CPD points. From the desk of KPA, we know that there are like 4 webinars with the CPD points are yet to be issued, and they will be issued to you in the course of next week. Then this event is also a CPD accredited event. Just unfortunate that by the time the meeting was starting, it was not yet on the PPB portal. But once it's approved, we will communicate the same to you so that you subscribe. So Alfred, just confirm if you are ready to take some of the questions that we have.
Yeah, I'm ready. I'm available.
Okay, so one of the attendees is asking that what happens if the parents are, if the parents are staying outside the country. They say on the requirement you need the copy of the national ID. Do you consider copies of the passport?
Yeah, we consider copies of the passport. It's also allowed.
Oh, okay, thank you. I'm seeing Jesse Kiro, who is asking, but I think you touched a little bit about this. Do you have a critical care cover in case of sudden eligible case like stroke?
Yeah,
yeah.
as I said before, our medical covers do not discriminate any illness.
Okay.
Yeah, so if you get stroke, it's an emergency. That's why we take the cover to cover you from such risks that are unexpected. So if it's a stroke and it's a newly diagnosed illness, then we will take full care of you within the limit. However, if it is an existing cover, we'll still be taking care of you, but you will have to have a waiting period of 6 months after onboarding before we start treating you for the same.
Okay. So thank you. Then there is Aaron Lutungu, who is asking if the premium payments can be done on installments.
No, this is a life cover. For life covers, the premiums are usually done once, because then I'll give you a scenario. For example, I request you to pay 4,000 for a cover of 100,000. Then you pay me 2,000 shillings. Then I'm not. Then tomorrow, for example, you lose a loved one. You will not want me to pay you 20,000 instead of 100,000. You want me to pay the full 100,000. So for life covers, usually happens you have to pay a full premium before the cover begins.
Thank you. So I think Edwin Mayaka Omabia is having a scenario here. He's asking, if my parents are older than 80 years, how do I benefit? Am I allowed to give guardians in their place? Now that's one. Then the next one, if by the time of taking the cover, I'm married, then along the way, we separated with my spouse. Am I allowed to change the details? What about when there is a divorce? Yeah.
Okay, I'll answer the two questions, but you allow me to go back to the question of the premiums. For the last expense cover, we only start the cover when you've paid full premiums. However, for other covers like medical covers, you are allowed to pay it in installments, 3 installments without any interest, or you can pay up to 10 installments with financing from the bank. That is for other covers apart from the last expense. To the other question, this cover only takes biological parents, not guardians, not extended members or some other people you want to put. However, it also depends if you were born and your parents passed on and you are taken care maybe by your uncle or your aunt or maybe a neighbor, and they have taken care of you since you are young, then they are considered as your parents. You can have them as the parent. That is if only you don't have your biological parents. Or if maybe your parents, you after you're born, you've never seen your parents, they might be alive, but you've never been with them. Maybe they decided to go some other way, you've been taken care of by your aunt. You're also allowed to put in your aunt. However, we'll need you to have an affidavit for the same. But you're not allowed to, maybe if because your parents are above 80, then you put your aunt who is lower than that. That is not allowed, and I want to remember that it will even bring further, it will be considered as fraud if you had do the same. So we can only allow you to put such members if only your parents are not alive and you are taken care of that by that other person before you became 18. But if your parents passed on after you are 18, then you only cover yourself and your immediate family. The last question was, sorry, if you can come up again about the last question.
Just hold. Just hold, I look for it. The last question was on, in case by the time of joining, I'm married, then along the way, we decide to part ways. Am I allowed to edit, or I get another wife and I want to replace?
You are allowed. That is why we call you a principal member. You have the choice to make any decision according to your cover. So if you're married now and you divorce later, you just contact us, you remove the dependent and add another one. It is also allowed.
Quite clear. So you say that this cover with the KPA is a corporate cover. And yes. Bring me to another question. Last respect, corporate cover with KCB KPA. If I join today and pay full premium, do I have a waiting period for it to mature?
Normally, yes. But however, as I mentioned before, depending on the number of new members that have joined, we can then extend our waiver on the waiting periods for the new members that are going to join.
Okay. That's quite clear. There's a member here who is asking for your contacts or how to reach you. I don't know if you are comfortable sharing it live.
Yeah, it's okay. My contact is 0714 656 646. 0714 656 646.
Okay.
You can also get me at 0782 42 6064.
Thank you.
Okay.
Thank you. Just for the benefit of Winnie, you talked about it, but you can just repeat. How many claims can I make in 1 year?
As a person, 6.
Thank you. So up to a maximum of 6 per year.
Yeah, per year.
Oh, okay. Thank you. So I'm seeing some questions coming on health cover. They're asking for premium. Maybe you can comment something, but I know that one might be detailed. We may need to have another meeting to customize it, but you can say something. Somebody's asking how much are the premium for medical cover?
The premiums for the medical covers are usually dependent on the family size per person and also for the limit that you pick. So if you choose maybe a limit of 50,000 and 300,000, then you're not going to pay the same as a person who has chosen a limit of maybe 1 million and 200,000. And also, if you have a family of 6 people, you pay different from a person who has maybe 5 people. However, for a Simba Afya cover, the premiums will range from 30,000 to around 100,000. For Simba Health cover, the premiums would range from 55,000 all the way to 300,000 to 400,000, depending on the cover and the person. But we can always customize the covers depending on the corporate and the member who is joining. Depending on also, you can also, what we do, because we're a bank also, we try to understand the person and the kind of job they do. Then we can also distribute the premiums along a period of time, maybe 10 months, 12 months, so that they don't feel the pinch.
Okay, thank you. There's an anonymous attendee who's saying that suppose he joined and along the paid premium for some years, then along the way stopped making payments. Then after like 2-3 years, rejoin again. Is he being considered a fresh starter or a continuing? And to add to that question, what happens if along the way, when he initially joined, the parents were under 80, but when he's restart to pay, the parents are now over 80. Will the parents be considered eligible or ineligible? Thank you, Alfred.
So how usually the cover works, if we usually give a grace period of 30 days. So if your cover expires and the
Alfred, are you there? I'm losing you. Maybe let us confirm if you can hear Alfred.
Not really. I think perhaps his network may be having an issue.
Let's just give him a minute to reconnect. So as we wait for him to join, allow me to welcome the Deputy Secretary, who also happened to be the chairman of the Welfare Subcommittee. As I informed you, this event is brought to you by Welfare Subcommittee. So the Deputy Secretary, maybe you can give a few branch reports today. Thank you.
Thank you, Bwana OS. Good evening, members. My name is Lilian Kaluma. I am the branch deputy secretary. Allow me to introduce the branch executive present in this webinar. We have Anthony Bitu, who is the chairman. We have Cletus Otieno, the branch secretary. Calvin Oyamo, the organizing secretary. Sarah Kisilu, the treasurer. Josephat Karuri, the deputy chair. And myself, Lilian Kalunda, the branch deputy secretary. We also have our able office admin, Purity Njuki. Allow me to mention that today's webinar was brought to you by the Welfare Subcommittee, which includes myself, the chair of that subcommittee, Josephat Karuri, who is our branch deputy chair, Laura Lilako, who is our secretary of the committee, Nicholas Onduru, a member, and Gideon Kimutai, also a member of that subcommittee. Now I'll bring to you KPN Nairobi branch reports briefly. Number one is just to remind you that this year the required CPD points remains to be 40. Also note that we have not shared the tokens for the following events. Number one is self-regulation of pharmacy practice in Kenya. Number two, prioritizing mental health among pharmacy professionals. Number three, improving adherence and compliance to insulin use using flex pen devices. And number four, management of cough in bacterial and viral bronchitis. Please subscribe to the above events in the portal if not yet, and the CPD will be shared within the course of this week. Also know that today's webinar is not in the portal. We shall notify you once it's available. Thank you so much for attending today's webinar. I hope you have all learned something. I might not get a chance to speak to you again. So just to remind you guys that tomorrow ni nane. Please be safe and have a lovely night. From the Welfare Subcommittee desk, we say thank you and wish you all well. Asanteni.
Thank you, the chairperson of the Welfare Subcommittee. And tomorrow, as she has said, if it's nane, as we demonstrate, we also care about your welfare, demonstrate responsibly, safety come first. I can see Alfred is back. Alfred, just confirm if you're back.
Yes, I'm back. Can you hear me?
Yes, I can hear you. So there's a question we were talking about of a member who joined, then after some time, stopped paying premiums. During that period, the parents turned 80. Then again, the member rejoined. Are the parents eligible? Then again, is the member considered a new member or can continue?
Usually the member is the member will be considered as a new member because we give waiting leeway of 30 days after the cover had expired before joining. However, because they had first joined, if they're coming as a new member, as a standalone, then it's going to be hard to admit the parents. However, if they are going to join another group, they can admit the parents because if only they were in the first inception of the cover. However, if for the waiting periods, it will also it's going to affect them. They're going to have a waiting period of 2 months because they have rejoined as a new member. The waiting period is usually set to curb claims that are foreseen. For example, someone can decide, I've not been paying premiums, now let me pay premiums because maybe by the look of things, they might be claiming very soon. So then they're only going to be continued to a waiting period of 2 months. However, if the member was there in inception, we can allow them to have the parents covered.
Thank you. So, Mr. Alfred, so for me, this is for my own benefit. What if, are there exclusions apart from the age? What if I take the premium as the principal, then for one reason or the other, I decide to take away the life of someone whom I've covered, knowing that I'm going to get 1 million from KCB. Will you still pay?
Yeah, usually the payment comes first. So the form, on the form, there's a question that asks you the cause of death. So if it is anything that is court related or has a case, then you do not pay. There's a place where we have indicated someone to sign. So as I said before, on the form you will sign. If the death occurred at home, then the police have if it was such a criminal then the chief will decline to stamp that burial permit or that form. If the chief does not stamp, then we don't pay. If the hospital does not stamp, then we don't pay. The police do not stamp because there's also a place for police if the person died at home or using an accident, then we also do not pay.
However, if all those parts are well signed and there's no any court case that is pending about that, we will still pay. However, if it occurs later that it was a fraudulent case and the person claimed because they had killed someone and they are taken to a court and it is an active court case, then the insurance then sends lawyers to fraud on this. Then they will be required to either pay back the money or have 7 years in jail. We also exclude cases of suicide, we don't pay. Any criminal related activity, we do not pay. Any am I clear?
The last part, I've lost you. The last part when you say any criminal activity. So I don't know what you said after that. Hello, Alfred, are you there?
Yes.
Okay, now another thing, there's an issue of biological parents. Where I come from, everybody is my father, everybody is my mother. How do you prove that the people that I nominate are my biological parents? Do I need, how do you go about that?
We call insurance a business of utmost good faith. So you have to make sure that the people that you're going to nominate are going to be your biological parents. Biological parents will deal watu wenye walikuzaa. If eventually you nominate people that are not your biological parents and we have their names there and you claim, we will still pay. However, there are things that happen after payment that people usually don't know. We usually have investigators in every claim process. You might not know them, you might not see them, but the company, the insurance companies always usually send investigators after they have paid the claim. So you might see someone in your burial anapitia tu hapo attend burial, but they're just listening to stories and collecting stories. And if it's in the village, stories hazikaangi. Utasikia akisema hata yule auntie yake alienda tu jana. So they'll not kumbe atakuwa baba yake. Then now later you're faced with some court cases of insurance fraud. So it is very important. I would like this to get to the members. It's very important that the person you're nominating to become it should be a biological parent, and if they were your guardian and took care of you only if when you are below 18 years, you provide us with an affidavit. What that does is that then if an insurance company opens up a case for you, then at least you can say that I declare that this was not my parent, they were my biological parent. So it is usually a business of utmost good faith. So members should make sure that they are truthful in a claim, because this is not a money making scheme. It is a product set to cover the life or cover you from any risk that is might affect you directly.
Thank you. Now, the big question, because it's easier for me to approach you when I'm in Kencom and walk to KCB Kencom and say I need a last respect cover. Then there is this issue KPA has brought you on board. Is there any advantage of joining it as a corporate like KPA vis-a-vis joining as an individual?
Yeah, there are advantages. Number one, that your fund is managed collectively, so your claims are easier sorted. Number two, we make payments. Then we have some advantages that come in. For example, we would waiver some waiting periods in case you have come as a group and maybe a member has joined extrally. But however, if you come as a person, then it is strictly you have to go through all the waiting periods and all other terms and conditions set. And also the prices will also differ because you might be paying more as an individual rather than as a group.
Thank you. That was very clear. And maybe comment something if KCB on your pension scheme, comment on something on your pension scheme.
Our pension scheme is running in two ways. We have the first one is the most new one in the market. It's called NSF Tier 2. So if you have been contributing your NSSF for a period of time, what the law does is the law allows you to contribute Tier 1 directly to the government, which is, I think, right now it's 400 and something. And then the other amount of 700 and something is Tier 1, then the other amount of 1200 is Tier 2. So Tier 2, the government has allowed you to take it to an insurance company. In this case, you can have it through KCB. We'll give you some forms to fill, then we write to NSSF to release your money for contribution of any Tier 2 that you have done before, and we put it in a fund. What this does is that then if you change an employer or if you move into a different work session, you are allowed to move with your fund. So you can also move with your pension as you go by in each and every employer. It allows you to have an next of kin. It allows you to track your money well. And then your money also, when it is with us, we invest it and give it back to a profit of around 15% per annum, from 11 to 15% per annum. When you go to the normal NSSF charges, you'll find that the amount of money that you get for NSSF eventually after someone retires is usually very low. I'm not sure if NSSF invests that money, but usually more so the same amount or less of what you contributed. So that is number one. That is a benefit that we offer currently. It's called NSSF Tier 2. So you can also contact me for that and more information. And then we also do income drawdowns. You can be contributing your pension as early as now. If you want to maybe get your money in the next 20 years after retire, you can have a personal pension fund with us. You contribute to us monthly. You just write to your employer, and when they're contributing, when they're giving you money, we carry it from your payslip and it comes to us. We do the same. We invest it to give you an income rate of from 13% all the way to 18%, depending on the financial year. And at the same time, you have an next of kin, and you're allowed also to manage that fund for a period of after retirement. We also now bring it back and give you maybe a third of that money for your consumption, and then subject it also to another investment, for another maybe 7 or 6 years, depending on how you're going to decide. Then we pay you like a monthly income, and then after it matures, we still pay you back your full amount of money that you had contributed before. So it's like you're getting profits on profits, and you're very sure that your pension is somewhere where it is very safe, and you don't get any losses because the amount of money that we pay you after retirement or on a monthly basis are not deducted from your pension. After that period of time, then we're going to give back your pension. This does not apply only to those that are employed. You can also contribute your own pension as a business person, as an individual. You can start early. You can start with as low as 5,000 all the way to 120,000, depending on your pocket.
Thank you. That's news, and that's a good news. I think the Welfare Committee will have a lot of discussion on that line for our members. At this juncture, asante sana Bwana Alfred. Okay, there's the last question. Maximum period for pension saving. Is there a maximum period?
No, there's no maximum period. You can save as from now up to when you get to 65 years, which is the legal retirement age. So now it depends with your current age. You can even save for a pension fund for 10 years, even if you'll be at 40, you can still access your pension fund. It does not limit you to the retirement age.
Thank you. Thank you, Mr. Alfred. At this juncture, I can say that information has been shared. Our members are now empowered, and I ask members for more clarity and to joining the last respect policy, kindly contact the office 0727 300 245 0727 300 245, or you can just walk into our office in Hurlingham. That is your office. And you will be assisted. At this juncture, from the desk of the organizing secretary, Nasema Hasanti, we are planning for more webinars, especially next week, and I'll be happy to see you again. Allow me to welcome remote. So Mr. Anthony Karibu.